Hi everyone, first of all, wish you a very happy new year. And you can pick the wish of your choice. The GST rates will differ, however, based upon your choice. That's how the year is going to be. And the new year actually started on a good note. Nifty in general up, Bank Nifty in general up. Next 50 was even better. Today, I will not say that this is a sector of the day in terms of gains, but auto came back and I've been talking about auto for a while. I was actually expecting this run up last week. Today the numbers started trickling down and the big boy, as I was expecting, Maruti, that came out with fantastic numbers for the previous quarter sale as well as December sales, and that was up 3%. And I had specifically mentioned Maruti and Bajaj Auto to be coming up with good results. Bajaj Auto numbers were not that good. While this sector is classified as auto, there is a lot of variability in performance because categories are a lot different. These top 4 players are primarily passenger cars, but Mahindra and Mahindra is also tractors. Tata is also commercial vehicles. Bajaj, TVS Motors, Hero Motors, Ola Electric, they are all two-wheelers, but most of them have significant EV presence. Ola in fact does not have non-EV presence, and all of them have their own characteristics. For example, Tata Motors deals with its international issues all the time. Ola Electric has been suffering from customer service issues for vehicles sold for more than a quarter now. We'll study this particular sector a little more in the Nugget section, not just the result expectations from select stocks, but sales and beyond from Q3. Today's market conditions look way better than yesterday. Actually, yesterday I did not even realize that today was a working day. I realized that roughly towards the closure of market hours. And today we have auto at the top of the chart. See here, Maruti, M&M leading the pack. Larsen and Tubro was at number 3. Reliance is back along with HDFC in the top tier. TCS, Airtel are also not far off. But clearly the bears were no match for the bulls today. Next 50 also looks better than yesterday. The reds have reduced and the intensity of reds also has gone down significantly. I don't remember last time I saw Union Bank at the top, but it was there today along with United Spirits, Varun Beverages, Geo Financial, Torrent Pharma. Varun Beverages is fast approaching its 52-week high now. Like I said, the bears were no match to the bulls at all today. 25 sectors were up out of 36. Holding companies continues to steer the markets towards profit, along with Adani Enterprises led diversified retail. Beverages is at number 3. Surprising to see aerospace and defense at the bottom, but that's primarily because of this bad trend. In 4 days, this will get off this chart. Markets are usually good when Reliance is up along with TCS, HDFC Bank, Airtel, ICICI. Infosys was kind of flattish and most Nifty stocks started the year well. Best gains of course were from Maruti. Bank Nifty also, while the gains were not very big, it is good to see across the board greenery. Volumes were expected to be low only on the first day of the year. They should pick up from Monday. Private sector banks looked beautiful today and the trend was in general up only for all banks whole day. Most of these banks will now start gearing up for the result season. The investing pack was fantastic today and despite being 1st of January, the volumes were high for many stocks. Motilal Oswal continues to march up, nearing its all-time high now. In fact, there is a target from some of the brokerages of 1200 for this stock now. I personally hold Motilal Oswal, Angel One, JM Financial right now in my portfolio. Telecom looked good with Nelco topping the chart 7.2% up. Defense looked really solid today, no major gains, but most stocks were up 2-3% and besides HL, everything was green. ONGC was down a bit along with Adani Total, but the oil and gas sector came back today. Castrol was up 3% on high volumes. Pharma was good as usual. There was profit booking seen in Piramal Pharma and Alchem Laboratories along with DRL. Sea of green as usual and 2 stocks hit fresh highs, Ipca Labs and Laurus Labs. Sugar stocks came back very strongly, 2-3% gains for most stocks. Consumption pack is increasingly getting better. Jubilant Food hit another high. Adani Wilmar stock came back 6.7% up. Varun Beverages has been consolidating between 550 to 650 for a long time now. It is looking at breaking this range. I've added few more entries to the non-edible section. These could actually go into IT also. Ixigo, First Cry and Nykaa. Ixigo was on fire today, up 6.9%. This stock seems to be on the way to an all-time high very soon, and I've been holding it for more than 2 years since pre-IPO days. Right now it looks all set for 200. One more stock in this segment which has been consolidating now for a while, Kalyan Jewelers, that is very close to its 52-week high now. This could reclaim the heights tomorrow itself, looking at the beautiful trend right now. Godfrey Phillips continues to correct 4% down today also. Associate Alcohol is looking at yet another high very soon. In fact, most of these stocks are very close to their 52-week high. Railway stocks are alternating in their mood right now. Today it was a green sector. Gains were consistent but very shallow, 1% kinds for most stocks. Most people will take the start for the new year, and FIs have declared that this year also the intention right now is to sell only, and DIs will continue supporting the markets. Now, one news which caught my eyes today, Bajaj Auto claimed the top spot in December EV two-wheeler sales with a 25% share. They were followed by TVS Motor at 23%, and Ola has made no attempt to fix the customer expectations or the feedback. SEBI's tightening has brought down F&O volumes to its knees at a 16-month low in December. This was expected, but the numbers are now a reality. December's GST numbers rose 7.3% year on year. Now, is this collection on account of higher rates or better consumption? I am not sure. Nippon Life may go for a hammering tomorrow. If this news is not seen well, I don't see it as a good news that investors lost 1800 crores under this particular banner because of the Yes Bank 81 bond exposure, says SEBI. This makes people lose a lot of confidence in the fund house. Bad news for Nippon Life, good news for other AMCs. I did not trade yesterday, I did not trade today. I'm still trying to create a theory for next year. I'll probably take a decision over the weekend and start on Monday. Auto sector, today's Nugget will be a little different because I'll not go very deep into stock, but I'll talk about the fundamentals of the sector. Now, this sector has dependency on a lot of factors. India's economy is hugely dependent still on agri, and a lot of autos are sold based upon the quality of agri season. For example, there was fantastic rains this year. So the rice crop in September, October, especially in the southern part of India, that would have been pretty good. So there could be tractor sales in this quarter in southern India, and sugarcane crop also should be pretty good because of the rains. Wheat crop is heavily dependent. If rains continue after the sowing, in that case wheat may get impacted. The second dependency is on the economy, which is not looking very good right now. There are no alarm bells ringing, but there is a lot of damage control required or action required. The focus right now is in boosting the tax collection, but we need to broaden the tax base first and make people have more money in the hand and then charge the taxes. Right now, taxes are reducing the money available with people. That is dampening the economy by reducing consumption. Now, event-wise, elections are mostly over. The big ones are done. Q3 results are about to come out. Then there are events which lead to huge auto sales. For example, this particular quarter, we had Dasara, Diwali, Navratri, Christmas, New Year, marriages. Most of these events are associated with buying something good. Automobile is considered that. Cost of vehicles is the fourth factor, which is pretty high right now. This is leading to lesser demand for vehicles because a lot of people who are already a bit jittery with their jobs, with their income. If the vehicle costs have gone up like anything, then they postpone consumption. Interest rates right now are not very high, but still on the higher side because Indian government or RBI has not reduced the rates yet. We don't expect the rates to be reduced in a hurry in India unless alarm bells ring in the economy. As a result, people are postponing demand, waiting for interest rates, especially for longer term loans for 5 years, 10 years, 20 years. Petrol, diesel prices are at the highest, though crude prices are not very high. These will not come down in my opinion at all. In fact, if crude gets a bit more expensive towards 80, 82, these prices could go north only. Cheap petrol, diesel typically sentimentally boost the buying of vehicles. Reputation, I talked about few examples. There are two brands specifically I want to mention. Ola, which is not having a good reputation right now, they could fix it, but they need to calm the nerves of customers, the existing ones right now. Then Mahindra, they have a reputation of not so good service, and vehicles, expensive ones, also breaking down, people suffering with service. This is something they have not addressed at all for decades, and I have owned a Scorpio. I will probably never buy a Mahindra SUV ever in my life, and I owned that Scorpio for nearly 9 years. The third one probably in this category is Tata. Tata Motors shareholders never make money because of the international business. Now in auto, there are two subsectors. One is the main auto sector, which has further bifurcations, passenger vehicles, two-wheelers. And then in auto ancillary also we have multiple categories. For example, batteries. Now in battery, there are two categories. Excite typically is the new battery. Amara Raja is typically the replacement battery. Similarly, in tire, we have multiple company, MRF, Balkrishna, Apollo. C8 is a good company, but it is small in stock market. That's why it's not here. But Balkrishna is replacement tires, that too mostly for commercial vehicles. As a result, because of rains, the demand for Balkrishna tires would have been high. If economy is not doing well, then MRF, Apollo will sell less. And I mentioned few days back, Apollo started well in EV tires. Now everyone is managing or manufacturing EV tires. That's why if you see, there is no specific trend in 52-week high lows. Some stocks are very close to 52-week high low. Some are very far off. Some of the stocks are not doing well. Some segments are not doing well. Similarly, in ancillary, if you see, the battery companies are very far off from 52-week highs. Tire companies are not that far off. So it is important to understand the sub-segment before investing in these sectors. Now the manufacturing cycle is a bit different for auto. First of all, raw material, there is dependency on the pricing and availability of raw material. The typical ones are steel, aluminium, zinc is a part of steel, paints, tires, and so on. This manufacturing happens in advance, at least 2 months ahead of consumption. So I would say for consumption in Q3, most manufacturing would have happened in Q2, which means the raw material would have been purchased in Q2. The stuff from ancillary dealers would have been purchased in Q2 and used to manufacture the cars. These would have been sold to dealers somewhere around end of Q2 or beginning of Q3. Dealer network is not completely company owned. A lot of these dealers are independent dealers. Company supports them in thick and thin. Customers would buy from these dealers when there is a festival, when there is a need, when there is an event. Now, if you look at the components or the raw material, this data is courtesy screener. All of this data indicates that raw materials are at a high price. This is stainless steel. This is aluminium. If you see rubber, that also is high. I'm talking about recent trend, and copper also is at a high. Now this price trend also is varying as per the commodity. Steel is huge in the last 10 years, 80 to 170, literally 2x. If you see from 2020 also 110 to 150, literally 50% rise in steel prices. Inventory is stuck in Q3 and right now. As a result, most manufacturers will reduce their manufacturing in Q3. What will happen is this will reduce the order inflow for the ancillaries. For example, the tire companies, the forging companies, even the raw material companies like steel, iron, the entire supply chain. In fact, right now, after December, which has ended yesterday, people will be a little cautious when they buy vehicles of the previous year 2024 manufacturing. Today I have highlighted some reasons. Your reasoning could be totally different. Maybe I have missed some factors. But be cautious. The industry is not in the best times right now. And the demand looks compressed, though the numbers for Q3 may be still fine, especially compared to Q2. I personally expect that in this quarter, for many companies, the cost will be low, the sales will be higher relatively. As a result, profit will be good. Also, one more part is the cost for next quarter's consumption or production will be low. This will add to the profit in this quarter. I right now have investments mostly in Bajaj Auto and Balkrishna Industries. I don't intend to buy anything extra. In fact, I might want to exit Bajaj Auto if it gives me an exit. Right now, I'm at a 12% kind of loss only. Hope this information was useful. Thanks for watching and I will see you tomorrow.